Thanks, Marla. That was a very compelling story. I don't have that compelling story. But I am Lewis Goodwin. I am with Square Financial and Square Capital, and happy to be invited today to talk to you and then to later talk to you in a breakout session. And our topic today is access to capital. Now, I think when you think of Square, you think of running payments through and processing payments. That is the genesis of Square, and certainly what we do a lot of. But as we go through this presentation, we'll talk more about how Square provides capital to small businesses. So one statistic here, small businesses face challenges in cash flow, and one of the statistics in a study that we did where 1,000 of our customers were asked if that was a concern to them, and 49% of them said that keeps them up at night. I'm surprised it's not 100, but it is a very important issue that is for all small businesses. And every business can use extra funds once in a while, but I think it's important as nobody else knows your business like you do, and nobody knows your cash flows like you do. And so it's important to be able to understand, if you take debt, will that really help my return on investment, or will it be sitting there not really helping the bottom line, or not really helping my business grow? And then also look at the sources of funds, where you can get those internally, or looking at external sources to borrow from. And then look at the cost benefit of each of those, and can you afford to borrow? And then looking at your options. Now, using personal funds is great if you have the ability to do that. I don't think everybody in the room has unlimited personal funds. You certainly have to weigh those in funding your business against what you would need for personal and family purposes. And so that is always a possibility. But what happens in a lot of cases where people use their personal funds or their personal resources is they go deep into their own personal credit cards or home equity lines, and they take those to the max. And in a lot of cases, people ruin their personal credit by using their personal funds to fund the business. But in some cases, it's the only way that they know. Asking your networks. Probably the biggest and most popular network is your friends and family. And that also has its downsides, as you can imagine. It makes for some tough family reunions when you've borrowed money from your family and have not paid that back. But there's a lot of other networks that you should consider. I mean, you look at the chamber and what you have surrounding you in this room, and the people that can help you and understand your plight as a small business. There's also venture capitalists that you can go to for both equity funding and also some funding in loans. So crowdfunding is very popular nowadays. You'll see peer-to-peer marketplace lenders out there. There's a lot of choices. They will all dive deep into your credit, and that will be both your personal credit and your business credit. And then certainly small business loans and lines of credit. There are the traditional SBA loans that you will see, the 7A and 504s. That's not for everybody, and certainly there are a lot of choices of whether you take a loan out for a long time, a longer expense for buying equipment or real estate, or lines of credit when you need to draw on those at certain times in the cash flow cycle. And then certainly by applying for a business line or a credit line, they are going to dive deep again into your personal credit. They're going to rely a lot on your personal FICO scores, and again, going back to my earlier comment on your personal finances. If you have dove deep into those to fund the origination of your business, that can have a long-term effect on what your ability is to borrow. So to take out a small business loan, we see some of the areas: inventory, new equipment, to grow staff, to expand. These are some of the things that are used, as reasons to take a small business loan. And there's a variety of requirements when you go to a lender, and this is both traditional lending with financial institutions in your area, or to online lenders. They will all take a look at your credit history, and not only you personally, but the length of time of your business, and also what your business model and business plan is. And so certainly your past can have ramifications on your future ability to borrow. And then when you are approved, it is great, but you want to make sure that you take advantage and understanding the terms that you have. A lot of times you'll see an APR, but an APR may not show you origination fees or penalty fees or other fees that you may have along the way. So you want to make sure that you understand the all-in cost of the borrowing, and also speed and convenience. I mean, you may need this money very quickly. A traditional bank process can take a long time depending on the lender, but a lot of the online choices give you a little more speed to getting that money. So Square, as I talked about, Square certainly processes a lot of payments, and as we evolved in taking those payments, we saw that, one, we had a lot of data. We had a lot of information, cash flow information on these businesses, and we are able to use that information to maybe separate what maybe you've done in the past, and not go to, when you'll go to a lender, you'll go to 3 years tax returns. They'll want to see all your financial statements. A lot of small businesses don't have all that sophistication and don't maybe have the history. With Square Capital, what we've been able to do is that we've been able to take those cash flows and those processing payments and really project through machine learning and through also artificial intelligence and how your business functions along millions of other small businesses that Square has and processes for. And so it gives us the ability to give loans out at a very quick rate. If we select you from your payment processing to get a loan, you can have that certainly the next business day. And it certainly is going to be very focused on what you've done lately, not what you did 3 years ago. And then also the trends and how diverse your payments are, the time of day, everything comes into play when we look at lending to small businesses. And over the past 4 or 5 years, we've been very successful in facilitating payments. Over $5 billion in payments that we've, or in loans that we've made and facilitated through banks and then directly to you. And we've served over 200,000 sellers in that time. And the difference of our loans that you'll see as compared to other maybe larger lenders is that our average size loan is $6,000 to $7,000. So we are really tailored to the small businesses to help them, grow, and that's so important. 96% of the businesses that we have lent to said that it has helped them to grow, and while that $6,000 to $7,000 is an average, we lend down to $500, and we lend up to $100,000. So I think that there's a lot of possibilities when you processed with Square or one of our partners. And we look forward to hopefully working with you in a financing in the future. And certainly we have some resources at squareup.com /capital, and I look forward to talking to many of you in our breakout session. Thank you.